Well, thank you so much for joining us today on a Monday morning. I'm Marlin, Bohling, your tour guide to the ag commodities. Well, let's take a look at the latest activity in our futures board, and our quotes are provided by bar chart. We'll begin with the corn. We're still a little weaker, but we are gravitating more toward unchanged right now. We currently have that December contract at 6.80.5. Well, now we're only down half a cent. And you know what? That's within one tick of the high of the day, believe it or not, even though we're still lower, if that makes sense. On soybeans, you have January quoted 7 lower now at 14.55 1/4. That's still about 14 cents off of our overnight high, so we're turning lower in the soybean trade. We're only 4 cents from the low as it stands right now. Let's move on to the wheat, and we'll start in Chicago. And here we have December trading 12 3/4 higher at 8.60.5. It struggled overnight, got as low as 8.34. And my goodness, look at that. We're about 26 cents above that right now. Now let's take a look at our Kansas City market. In December wheat, we're 16 1/4 higher at 9.69.5, within about 2 cents of our high of the day there. In spring wheat trade in Minneapolis, we're 14 1/4 higher on December. 9.68 3/4 is now our last trade. On the cotton board, we have December down 103 points. We're at 85.90 right now. In studio with us, we have the one and only Chris Swift of Swift Trading. He's based here in Nashville, and always a pleasure to have you come in. Thank you.
Good morning. Yes.
Thank you. Thank you.
Yes,
All
sir.
right. So here we are, Monday, election eve.
Yeah.
I would imagine we're 2 days ahead of the WASDE report. Mm-hmm. There's got to be some jitters in the market, I would think, this week.
Oh, absolutely. There's no shortage of things to kind of look out there and decide which way we want the market to move one way or the other. But what I took from last week more than anything was that China was trying to come out of their COVID restrictions. So as they lift those, regardless of how fast or how slow they do, that's an undertone that probably is not going to go away for a long time, because they will be building back, increasing their infrastructure, increasing their transportation, their logistics, every aspect of production and manufacturing, and that all takes a lot of energy there and probably would help in our grain movement too.
Now, that seemed to be the theme on Friday. Mm-hmm. Then this morning, I saw a news story where it said they may actually shut down more.
I did see that too.
So who do you believe anyway?
Right now, I think that with the policies that are in place and the need that they have to bring manufacturing back up again, I think the undertone is going to be quite a bit stronger than the bashing of it.
Okay, farmers are coming down the home stretch on harvest. Mm-hmm. I would imagine when we get the report later on today, basically soybean harvest will be done.
Pretty much
except
done.
for, as Dad used to say, the short rows.
Right.
On corn, we're not going to be too far from being done there as well, I would imagine. But once the farmers put that grain away under lock and key, is it going to take higher prices to get them to allow it to go before the end of the year?
I think so. I think the increase of on-farm storage has been very apparent in the elevators and the ethanol plants bidding higher and bidding over for corn right now. Historically, we see basis that's under quite a bit, and now we're seeing it over by quite a bit. And that's just an interesting facet of this year over many years in the past, is we just keep having these high prices here, and then when something does take place where it minimizes the crop or increases demand, then they flurry a little bit higher. But the biggest thing, we're still trading almost $7 a bushel corn at the end of harvest. So something clearly has to be different than in years past. And we think it's a combination of the increased demand as well as just the lower corn crop this year.
So let me ask you this.
Right.
The farmers that you talk to, mm-hmm. are they having to adjust their strategy to something a little more unusual this year just because it is such a weird year?
Not really. I think they're just holding back on marketings a little bit more than anything. Again, the on-farm storage and an inability to barge it down south. So right now, a lot of grain is just sitting there waiting to be moved until we can get the barge traffic flowing again on there. But no, really, the farmer hasn't done much of anything. I think if you look at anything, it's livestock producers that are going to be in the most peril going forward, just because simply basis. We have a lot less corn in the south this year than what we do in the north. Now we really need that rail transportation and the barge transportation to be able to make sure that the South doesn't go vacant on corn.
Hold that thought, if you would. And we'll come back and we'll talk about the livestock sector in just a moment with Chris Swift. We're back talking with Chris Swift of Swift Trading. All right, Chris, I wanted to talk about the livestock summary from last week. Just kind of a recap, if you don't mind, on the cash markets out there in the country. Let's go ahead and bring that up here. Now, on the cash cattle trade on a live basis, it looked largely like we had a range of about 149 to 152. I believe from what I heard, the average was more like 150. Would you agree with that or not?
Correct.
Okay, dress basis sales had a range roughly 240 to 243. Does that agree with your source?
Yeah.
Okay, so what do you think about that overall?
Well, it looks like that the packers are pulling a lot of contract cattle for the 1st of November. So they had a lot of contract cattle bought. They will use that to help manage the decline of cattle slaughtering that we're going to go through in the coming months. And I think it's just a control of margin more than anything, because we're not seeing boxes move up dramatically, and we sure don't think we can push the retail price any higher to the consumer. And, I think that would just kill demand if you were to do that. So everybody is trying to balance what they can with what they've got on. And we don't think that there's any shortage of beef right now because of the amount of storage coolers that we have, the number of cattle that we have on feed, and we think that maybe Brazil dumps quite a bit of beef on us on the first quarter quota that'll be coming up here in another month.
Really?
So, yeah.
Okay.
They'll have large amounts to import to the U.S.
So it says cash live hogs last week were down 268 on average at 67.18. Carcass basis hogs on Friday afternoon were down 94 cents at 85.18. So does that make you think that they're probably going to flatten out or maybe weaken up in the hogs as we get into this week now?
It has been interesting to watch the hogs. Hog prices have been very volatile in the futures. They haven't done a whole lot when you look at the cash markets, but the futures have had some $15, $20 swings in them, and again, the index not having moved much of anywhere. I noticed that pork prices are falling still in the retail meat case, and you can get some really prime cuts of pork for extremely inexpensive in comparison to alternative proteins.
Well, let's take a look at our futures then. We'll go to our quotes provided by bar chart here. And as we go to the live cattle board, we're higher led by the nearby contracts. December now 57 higher at 152.22. The deferreds just barely higher. What does that mean?
Well, right now we're just looking at there's not that much happening in the back end. There's a slight premium. And that premium in the back end might be justified, it might not. A lot of it will hinge on what we have in November and December placements. So everybody seems to think that they're going to be a little bit lighter as they have been over the course of the last several months, but I'm not real sure. I think we had a pretty good fall run, and the sheer number of cattle that I saw move might not have as near as low a placement as what some might think.
Let's look at feeders, and here you have January 32 lower at 179.30. March is down just a nickel, April up 7, so it doesn't know where it wants to go, does it?
No, not really, but that cattle feeder has got so much to have to do with input costs that I'm not real sure how they're going to manage the ever seemingly increase of feed costs, fuel costs, and probably labor costs as well.
Lean hogs, we currently have the December 57 higher at 83.55, but beyond that, narrowly mixed. We'll call it about 12 lower to 17 higher. Well, thanks again for coming in, Chris.
Always
good
a pleasure.
to visit with you.
Yes, sir.
Appreciate all the insight into the markets. Chris Swift of Swift Trading. Janet, back to you.